friends, welcome back one more time here in my channel of Agribusiness News from Imextrader. Today is May 29. My name is Rodrigo Ferreira, International Trade Customer Sales. China demands from agricultural commodities will remain strong and it's here to stay, say economists. The Chinese government recent interference in the commodities market scared the market this week. The announcement weighed on some price, even if in a timeline manner, but as reinforced by economist Roberto Dumas, professor at INSPER and a specialist in international economics, it's only reaffirmed the strength of demand of the Asian nation, and this is attempted to contain some of the speculation. Among the demand-controlled goods are metallic commodities, in particular copper and iron ore, in addition to corn, also in the focus of the Chinese government. In the last quarter of the last year, China grew a lot. Quarter by quarter, you can see that the China grows less and less. But what we take in account is that in the other grow 2%, it had to explode in infrastructure investments. Need infrastructure and real estate seed so much, you need to show economics grow because China is a dictatorship, say Dumas. However, he points out that in the same way, the bank leverage in the Asia country continues to grow, now closer to 300%. While the GDP continues to grow. However, in a more limited way than in the previous year. Thus, it is possible that from now on there will be less investment in infrastructure and change the focus. I believe that the second half of the year iron ore prices should cool down because China is returning to the new normal. In other words, if it's to become more and more a consumer economy. So, despite the fact that the iron ore may cool, the demand of agricultural commodities will remain very strong, say the economist. The fear to the strong demand for agricultural commodities has been compounded by structural and cyclical conditions. They need to increase the consumption growth engine, giving more income to the Chinese. And the cyclical reason that's the African swine fever and that decimated the 350 million pig heads. So until they rebuild that, the demand for animal protein, grains, corn and soybean remains strong. So the demand of agricultural commodity is here to stay, adds the economist. The government of the country, which is the largest global buyer of agricultural commodity, has shown several signs that it has been working to reduce its dependence on imports for grain and cereals, crop by crop. The result, however, is expected to appear effectively only in the long run. This week, the Department of Agricultural Development of China released a bulletin stating that it believes that the Asian nation will move closer to self-sufficiency in grain such as wheat and rice by 2025. The study estimated to show Chinese production in the year in the question raised its production to 692 million tons in 2020, 669 million were the harvest. Grain production will continue to grow and food security will be completely guaranteed during the period of 4-5 years plan, says the Vice President of the Chinese Academy of Agricultural Science, Mei Shurong. On the other hand, despite of the growth in production, the import of some grains, included wheat itself, has also grown substantially. The projection is that the 21-22 harvest of the Chinese wheat will be 136 million tons, while imported are expected to register a volume of 10 million tons, the second largest in the country. For soybean, while a record harvest 19.6 million tons, it's estimated in this new season 8.3% more than in the previous harvest. The Asian country international purchase for this commercial year are estimated at used at 103 million tons. In the same way, for a corn production of 268 million tons is estimated in the commercial year 21-22, with imports that can reach 26 million tons. The issue of food security for Chinese government is moreover and above all a matter of political and social importance. We cannot allow social tension to escalate due to the lack of food, and this is in a way beneficial to the producers of commodities, explained Roberto Dumas. The recovery of the pork head in China has been bringing on a very intensive stimulus in the recent months to demand for soy and corn. For cereal, strong purchase continue and are even breaking the records, while for soybean they lost some of their momentum. And part of that less intensive movement has mainly been a reflection of a feeling of less confidence in Chinese pig farming at the moment. Although domestic demand of pork remains strong, which imports breaking records, supply is now greater. The increase of retention of breeding stock at some point would bring a greater supply of meat. There is also a governmental reserves of frozen meat, which are, according to the Chinese government, very comfortable, and the imports that have more than doubled. These and there is a tightening as a pig farming margin over there, explained Eduardo Vanin, market analyst at Agribusiness Commodities. Thus, the Chinese animal feed industry have already been reducing their percentage of soy bran in their products, also in compliance with a resolution presented by the country Minister of Agriculture. Meanwhile, imports of other cereals to compensate of this trend are already increasing consistently, including wheat, barley, and sorghum. China against the global financial market. Despite this scenario and this clear scenario of agricultural commodity representatives of the international financial market, they say that it has already proved more difficult for China to rank the commodity market. In an interview with Bloomberg, analysts at Goldman Sachs say that the speed which economies that are decisive from the global picture grows means that the Asian giant is no longer the only buyer dictating price. The opinion has shared by the leader also of Citigroup. Thank you so much to have you here one more time with us. If you like, help us share, give us some likes, and bring comment back from the next agribusiness news. My name is Rodrigo Ferreira, International Trading, and here's we connect the business globally.